Good to go. All right. Does it say I'm live on your on
It does.
Instagram?
Oh,
Yes.
on IG? Hold on, hold on.
Yeah, let's check IG.
Yeah, it says that you just started.
Woo! It's a Financial Friday party, baby. What is up, ladies and gentlemen? We are here, rocking and a rolling. Me and my boy Glenn, as per the usual, it is Friday, and you know what that means. Financial Friday, where we talk about crypto, the market, jobs, interest rates, anything and everything that has to do. Before we start, let us first say that everything we talk about and any of the opinions we give are strictly our own. Okay. Although we are financial advisors, the advice we give is strictly our opinion. Okay, so that means don't go to your this person and say, well, Cam and Glenn said, and then like don't do that. This is strictly our opinion. Always do your own due diligence. Always do your own research. We do this to help educate the masses. We didn't have this education growing up, so we want to make sure you guys have it. Okay, but let's get into it. My man Glenn, what is good, bro?
What's up, Coach Cam? How you doing, man?
I'm good now that we're on the phone.
Nah, good to see you, man. To everybody watching, welcome to Financial Fridays. Look forward to kind of hearing your thoughts today.
Yeah.
Definitely want y'all to chime in, share your thoughts, especially if you are, you've been doing your own research. But yeah, man, I'm looking forward to connecting with the people today and just sharing what's on our hearts, on our
Mhm.
minds, to educate the community.
Yep. Our third Jeremiah is unable to join us right now. He's watching in spirit, though. We already know. So we do appreciate you, brother, and you are missed as
Yes,
usual.
sir. Sir.
uh, so as I kind of pull up the article, Glenn, I'll pull up the job reports. U.S. economy adds 311 jobs.
Yeah.
Kind of tell us about the article. Jeremiah picked the articles this week. But nonetheless, of course, they are amazing articles. So we're going to try and do them justice for him.
Yeah, so I thought that all three of the articles were very interesting, man. To our listeners, you guys will actually see kind of how the dots connect a little bit. There's three words in general that will connect these three the three articles. But as you pull up the first article, I really liked it, man, because since January, there's been constant talk about the rise of interest rates. There's been talk about the economy, stocks, crypto, just all different types of things. And so, uh,
Mhm.
the the first article that you bring up, oh, you want to do that one first? Cool, we can talk about that one.
Yeah, there was
Cool.
this one.
Okay, cool, cool, cool. So yeah, let me go backwards. One of the things I know as we closed out 22, there was big talks about predictions of the job market, right? How many predicted job availabilities based off of the job reports? I think it was projected to be like $500,000. I'm 500,000 by this time frame. And so for this particular article, as it mentioned, job reports, U.S. economy adds 311,000 jobs in
Hmm.
February as labor markets stay strong, right? And
Yep.
so back in January, there was, like I mentioned, there were a lot of projections, and so
Hmm.
with this one here, um, 300,000 jobs added just last month, so in the month of February, and obviously, more than expected because the projections were not as high. So it also talked about in this particular article, about unemployment rates, right? So while there's jobs being created, there's also still the unemployment rate on the rise, right? And so it talked about just kind of in February, the unemployment rate being 3.6%,
Hmm.
um, based off of everything. So, and then something else that I liked about the article or within the article was there was an economics um, expectation was, they said it was in a Bloomberg's report, but it talked about expectations was 225,000, right, for the month
Hmm.
of February. And so here we have now added 300, a little over 300,000 jobs last month. And so
Yeah.
what does that do for the economy? On one sense, trying to counterbalance everything that's going on with the rise of inflation rate or of interest rates. Still trying to supply jobs, right? However, on the other side of that, you still have the unemployment rate still on the rise as well. And so
Yeah.
you have the job markets trying to, raise certain hourly raises to attract people to fill those jobs. But as you can see, based off of the rise in unemployment rate, still, it's not working. So I wanted to pause there real quick. What are your thoughts so far? And then I have a couple more notes based off of this article.
So that was something that like I was gonna talk about too, as far as the it's funny because it's like, oh, we added all these jobs, but at the same time, it's like, but there's less people filling them. So in retrospect, it's like where's kind of the the fulcrum tip, right? Is yeah, it's great that we added these jobs, but at the same time, if no one's filling them, what does that mean? I actually wrote something on LinkedIn about that where, and I think it was a LinkedIn article where it talked about, the skewing of the data when it comes to employment, unemployment, and then what it looks like as you're looking at, well, how hard is it actually for people to be employed right now, right? And so I thought that was a good point that I'm glad that they kind of addressed when it came to this article, as far as like, the wages as well. I thought this was interesting, like all these wages went up when it came down, that, when they went up, then they decreased, exponentially.
Right.
And then now they're, it's weird looking at this when you look at wages. And you're like, oh, this is an odd stock. And now, it's, we call this the consolidation when you're looking at stocks, right? So I thought this was an interesting graphic as well when you're looking at kind of where are the wages at, and where you would think that they weren't, I would say, leveling out. You would think they would be increasing based off inflation, and all those based off the amount of money that a lot of industries are saving by doing remote work or partially remote work. I mean, so it's one of those things that raises an eyebrow for me, honestly.
Yes. And it really does, because on one aspect, it makes me think, especially as you mentioned about the remote positions, right? And so as these jobs are being available, why aren't people filling the roles?
Yeah.
Right? Even from being home, even from the convenience of their home, like why aren't they doing that? And so this is going to be interesting. I kind of have my eye on this, just watching it over the next quarter as well, because I feel like the conversation in 3 months, I'm hoping that it'll be a little bit different. Obviously, the Fed has a lot to do with that, with the increase in but yeah, so like I said, I'm going to keep my eye on this in particularly, because I'm just kind of curious. Like I said, you have so many people who are like, hey, I can't find a job, but yet you also have this article published saying that, hey, just this last month in February, there was 300,000 jobs, over 300,000 jobs, that are now available. And so this is going to be interesting, man. And specifically in this article, it talked about, so if you have an interest in leisure or the hospitality industry, just in February, it was 105,000 jobs that were added. Right. So, and they were saying like, that was the most in any industry, and just this past month. And so I thought that was pretty interesting, because those are generally two industries that you always need, right? When it comes to hospitality, you need that. Same thing, the jobs that are within leisure, you need those as well. So it doesn't surprise me that it has the most in any industry, but at the same time, 105,000 jobs added. That's interesting.
Well, it makes you, so here's the thing. So, and I just thought about this, is here's the skew, right? Are those 105 jobs that were there before COVID, and now they just brought it back?
Right. And so it's funny that you mentioned that, because in a similar article, it kind of talked about that, right? Well, it didn't specifically say it, but based off of the numbers, that was prior to COVID, and then it got taken off the shelf, and now back on the shelf. So very interesting.
They're like, oh, we added jobs.
Yeah.
But weren't those the jobs y'all got rid of like during COVID?
Right.
We're going to talk about that. We added jobs.
I mean, obviously the mindset prior to prior to the pandemic and what it is now is slightly different for a lot of people because just being able to work from the comfort of my home,
Mhm.
is a blessing in itself where you didn't have as many remote. But again, it goes
Yeah.
back to my initial thing that I was saying not too long ago, as far as like when it comes to jobs that are now advertising that, hey, we've not only added jobs, but we've added remote positions. Why aren't people picking those up? So
Yeah.
that I'm
Yes.
really curious. So if anyone's watching this or if you're watching this, put it in the comment in the chat. I'm very curious on why you think or what your thoughts are on why people are not filling those specifically remote jobs that are being added.
So I have an opinion on that,
Okay,
teacher.
go
I
ahead.
think so. I think so. So from the buzz on LinkedIn,
Mhm.
and other places, it's because employers are also lowering the salaries for those jobs.
You said they are?
Yeah, because they're like, oh, you get to stay home, and it's like cool, but then I'm at home eating more food, using my own internet, using
Right.
my own electricity, using more of my water, like
Yeah.
so not to mention inflation's crazy. So like I'm not really saving any money, dog.
Yeah. I love
uh
it.
but all right, I'll pull up the
You
next
guys
article.
agree with Cam put that in the chat too.
I digress. So as far as so the next article I'm gonna pull up is the why Silicon Valley Bank's crisis is rattling.
Yes. Okay. Got you. This was an interesting first read this morning. I was like, when I seen Silicon Valley, I was like, it already piques my interest. A lot of stuff that goes on in that area, technology, investments, all that type stuff.
Yeah.
I'm very curious to read. But yes, is why Silicon Valley's banks crisis is rattling America's
Uh-huh.
biggest banks. So,
I always
um,
forget. I always forget I have to click the button on here. I like pull it up and I'm like, why isn't he talking about it
oh,
yet?
got you. Let me see what you got. Let me enlarge my screen real quick. So in this particular article, and what I was saying kind of connects the dots in each one of the articles was it spoke very, very much so on three small words but actually is a huge impact globally. And those three words are rising interest rates.
Hmm.
Right. So, in this article, obviously, it kind of dove into that. It talked about so there are two in particular in California. There are two in particular leading institutions: the SVP Financial and the Silvergate Capital. Right. And so,
Yeah.
as I mentioned, they're two of California's leading institutions. Right. So, in this article, it talks about them losing money, or as of the outflow of deposits forced both to sell assets at a
Yeah.
loss, right? And
Yeah.
those assets were bonds, right? And so it's funny because I feel like this past week I've been hearing a lot of people talking about bonds,
Hmm.
right? And so this was interesting to actually come across and read. And right, so here's the education piece to anyone listening. Banks are big investors in assets like treasure bills
Yep.
because they need lots of safe places to park their cash, right? And so that really stood out to me. It obviously talked about the Fed hiking up rates at a
Hmm.
rapid rate. So obviously there are people that have been interviewed from the Fed, like the Fed chair, and basically said that they warned earlier this week that the central banks may have to speed up the pace, of his rates increasing to actually cool the economy further. And so when I seen that, man, I thought it was very interesting. Not so much surprising, just because of the talks that have been going on, from January, February, from a lot of the articles that are out there on the market. And so this was very, very interesting as well, just kind of connecting the dots with that.
For sure. So this is something we learned a lot about this week in my Series 65 class, actually.
Mm,
Um, and so, and I didn't know this originally, was that when it comes to bonds or treasury notes and things of that nature. So once again, it's like a fulcrum, right? So
yeah.
there's like two axes and so forth. So like say you buy, a bond at this price.
Right.
Well, if the interest rates go down, your bond will increase.
Hmm.
Well, if the interest rates go up, your bond now decreases.
Right.
Well, so according to the article, the banks were buying all these bonds when the interest rates were low because they were, boom, they were getting dope interest rates. They didn't think that inflation was going to happen the way that it did.
Right.
And it tanked all their investments.
Mm-hmm.
And I think it's weird because I'm like, if I did work at a bank, I feel like that's just like general knowledge as far as like what goes up must come down. and in most senses, like what goes down must also at least level out or come up, right? And so I thought that was interesting as well, as like when it talks about the power of bonds, how influential they are and why people talk about them so much, because as the rate of the bonds change, that affects a lot of the other types of money places that are out there, right?
Yeah.
Because they're usually the safe option, and that's why this year's been so crazy, because one of the safest options has not been safe.
Yeah, that's, which is very interesting. I mean, and even though these lending institutions, the SVP Financial and Silvergate Capital, even though they're small, it's still having a huge impact. So based off of even what you were just saying, the question kind of pops in my head, like why or how does this affect the larger banks?
Yeah.
And so the problem that this actually creates, and it states this in the article, the problem that it actually creates for banks is higher rates lower the value of exactly what you were just saying, the existing or their existing bonds.
Yeah.
And so something else I found interesting, because it was talking about these two particular institutions versus will the banks like Bank of America and Wells Fargo like have to worry about this? And so something that was interesting, it talked about back in 2008 versus now, a lot of the larger U.S. banks are a lot stronger than they were before. So obviously they've probably took some lessons learned from that crisis back in 2008, made some adjustments in the event that this was to happen again. So the good news is that banks has not been forced to actually sell depreciated securities. So just kind of coming back full circle to the overall article.
Oh, for sure. So yes, so this, before we move on to the next article, this is like the perfect quote, is going from 0 to 5% interest rates in a period that is faster than any time in 4 decades, you are going to have casualties.
Yes.
And that's just how it be, man.
Yeah.
So let me pull up the next article.
All right, cool, man. This is like I said, interesting stuff, man. Just to stay in tune on what's going on, especially if you are someone that places your money in banks, or you are, someone that is, whether you have a job, whether you don't have a job, whether you're seeking a job, just being in touch with what's going on as far as interest rates and how that is actually impacting, like I said, not even just your city, not even just your state, but across the outside of the states, but just globally. So. And then as we talk about all that that impact that it has, let's see. So the other one, which was again interesting, talking about oil.
Oh, was it oil that he's?
Yeah.
Okay, stand by.
No worries. But yeah, so as you gear up to pull it up, I know we've in the past we've talked about oil, we've talked about stocks and stuff regarding all of that. And so this, again, the key words that I was referring to not too long ago, those 3 words. And so if you guys are note takers, the rise in interest rates, right? And so rising interest rates are not only affecting the small banks, they're not only affecting the decision of the large banks, they're not only affecting the job placements, they're also affecting oil, right? And so as we continue to see the rise, and sometimes we get kind of like the gas prices go down, get super excited for like 2-3 days, and then they jump back up, right? And so, and I fall guilty of that too. Hey, let me go fill up real quick. But anyway, regarding the oil, the rise of interest rates are, as I mentioned, they're not only impacting locally, they're impacting globally. And so in this particular article, it talks how oil posted a weekly loss with macroeconomics headwinds dominating the market as traders await clear signals on China demand trends. So I want to pause there real quick.
Mm-hmm.
The reason why I kind of opened it up with that is because it's very it's very important for people to recognize that some of the decisions that are being made by China or other countries, right, based off of oil, just the oil talk, affects us as well, right? So that's why these decisions are being affected, globally for that simple reason. And so in this particular article, also talk about the market, has had a bumpy year so far, and it's kind of being tugged back and forth. And some of that is being driven by some of the conversations that are being had in China, right?
Yeah.
So that was very, very interesting, man. And I wanted to kind of highlight that because I wanted people to really understand that it's not just the decisions that are being made at the White House. Like, it's other factors that are coming into play as far as like, the talk with Russia, the talk with things going on with the demand in China, and different trends within those two countries alone, let alone the other countries. And so this was a good article, and I appreciate the read. And then lastly, I wanted to kind of highlight. There was a piece that said banks do say that most banks are expecting demands on the. I'm sorry. Regarding this piece here, let me go to my last note. Oh no, that was it. I wanted to kind of highlight how banks are kind of going. Not banks. The market has had a bumpy year, kind of going back and forth. It's like playing tug of war, just from January. We've talked on here a couple of times where interest rates or economy was kind of on the rise, and then it keeps dropping. So so those are my thoughts, man, on this particular article.
Mm-hmm. No, it's definitely been like super up and down. And that's why, like, I don't even look at my stuff. I just like, all right, I got it on discount when it dropped, and I was like, I'm gonna just let it ride for however long, and so on, whatever. But so to compare to kind of the whole oil situation is like, I forgot who I was talking to this week, but or honestly where I heard this. I heard it somewhere, but talking about wheat. So for instance, like how much things that happen in other places affect the rest of the world, right? Because we're all intertangled at this point, trade, all the import, export, all that. So like, for instance, wheat, the Ukraine is one of the biggest exporters of wheat in the world. So what's going on right now? Russia and Ukraine are going at it, right? Okay. So secondary to that, Russia is one of the most producers of wheat and corn and so on and so forth, like exporters in the world. But embargoes are probably going against Russia, and then Ukraine isn't able to do as much. So like, I didn't even notice it because I don't really buy a lot of bread. But anything that has those ingredients in it is starting to increase. So loaves of bread or more, things of that nature, right? And so, that doesn't have anything to do with what's happening here. That's something that's happening somewhere else. And I think too many times, we think that the U.S. economy is strictly only dependent on the U.S. economy. Like, nah, man. I mean, what's happening in other parts of the world? Because the people who are, especially like the hedge funds and things like that, they know at the micro level what's going on. Kind of like when Jeremiah talks about commodities and things like that. So a lot of people are like, oh, excuse me. The iPhone, they're like, oh, the iPhone can't come, there's a delay because they don't have microchips, right? So people are like, oh, Apple, blah, blah. Well, then, the smart investors like, oh, well, what's the thing that they don't have? Okay, they don't have microchips. Well, guess what's about to become an extreme demand right now? Microchips. Things of that nature, right? Like, or, there's a huge push on cobalt right now, because there's a lot of things coming out talking about the mining procedures that happen with cobalt, right? So people are like having kind of like that moral compass moment where they're like, oh, like I want to invest in it because like it is, makes money. But like at the same time, it's like, oh, the way that it's, it's like blood diamonds, like, oh, but the way that it's like gotten is not okay. And so I think that's if there's anything that like people should take away too, is like when you're paying attention, like it really does have to be somewhat of a general sense of what's going on in whatever market you are looking at.
For sure.
hmm
Yeah, 100%.
Another interesting thing I found out this week is whenever you are buying like an international stock, like an international company,
Okay.
if it's on the stock market, but you know the company is actually overseas, is that what's happening is that a bank has a branch that's in that country. And then what happens is that bank buys that stock. Then they allow Americans or any other country to buy it
Yeah.
because of that branch that's there. So you're buying your what are called certificates. You're like not even buying the stock. So
Interesting.
that's my cool stock G whiz thing of the day.
Finding the loopholes.
Man, I'll tell you what, like diving into, just all that stuff. I already had a fairly good amount of knowledge, but like really getting into the fundamentals of it all and like learning kind of where, as like you hear about in movies and stuff, is where is the money changing hands?
Right.
Like where's the paper trail at? Like it really makes you kind of see like even more so what you need to pay attention to when it comes to things like this.
Yeah, that's interesting, man.
Cool.
Yeah, that's really interesting. I love it. I love it. I love it. I love it. Cool.
Mm-hmm.
So yeah, that's all I had, man, on the articles. Like I said, great reads this morning. And just kind of like honing in on what's going on over the last week in the market.
Mm-hmm.
That's affecting so many communities, so many people day to day. And we don't want folks to remain blind by the information that's actually out there and at our fingertips. So
yeah, and it's like, and I think too many people fall prey to like the whole like the generalities of things, right? Like, oh, the market's always going to go up 10% or things of that nature. And it's like you really got like be educated on why, actually what that statistic is too, right? So, one of the things I tell people to really pay attention to is like not only what was the gain that year, but what was the inflation rate too? Because that affects a lot, right? So, for instance, like 2021, yeah, the market. Let's say the market went up 10% once you average it out, but inflation was like 9.1%. By the end of the year.
Yeah.
And so like so those are things that you have to think about. So, that's why, Warren Buffett is one of the most successful ones, is because he's just looking at longevity. He actually is looking at like, oh, like this thing is gonna eventually reach a point in the future where like the investment is paid for itself.
100%. 100%. Yeah, I agree. What's going on, big bro? I was actually stationed in Honduras. That's my big bro, man. He was Army vet. Salute to you. But yeah, man. But Cam, absolutely, I definitely agree with you, man. Very interesting.
All right. Well, hey, we're gonna give you guys 1 minute of your time back, as Glenn and Rico like.
It balances out because last week I think I went 55 seconds over, so we're good now.
We give it back. As per the usual, every Friday we are here at 3 p.m. Pacific Standard Time. Catch us, message us, let us know if there's an article you think would be beneficial for people. Message, share everything. This knowledge is for you guys, and ultimately we want to make sure that we just that 1% better every single day. So without further ado, G-Man.
That's it. Hey guys, we're building a community to educate the community. So let's keep educating the community so we can be educated. Have a good one.
We got to put that on a shirt. All right, y'all. We'll see you.